Here in this video, we will be going over all of your Tesla stock breaking news. But I think some of the biggest breaking news that actually happened on Friday that I missed was Cathie Wood. Again on Friday, Cathie Wood reiterated she believes Tesla can increase 7 to 10x over the coming years, setting her price target at $2,000 per share. Listen to the clip.
We have a 5-year investment time horizon for Tesla, and our price expectations from here, I mean, we see roughly a 7 to 10-fold increase. I know we're in the process of revising our model, so I'm not at liberty to give you the new number. But
would that new number be higher or lower than 2,000?
Well, we're pushing it out a year, and therefore it will be higher.
So she said they're going to push out the model a year, presumably go out over the next 6 years and judge where they think Tesla stock is going to be. And Cathie Wood thinks Tesla stock's going to be higher than $2,000 6 years from now. I don't know about you guys, but I mean, I think most of you guys, based on the age demographic to watch this video, in between 45 and 55, I believe even on the high side, you got 6 years to wait for Tesla stock. Now, obviously, $2,000 per share. Not everyone needs $2,000 per share, but that I think could, be a very realistic possibility. I actually think higher than that. Given enough time, 10, 15, 20 years, Tesla stock could be even higher than $2,000 per share. Even here in the near term, I do believe Tesla stock is very oversold and the sentiment is washed out. It wouldn't surprise me if we could actually get a bounce in Tesla stock soon. And I know some of you guys are like, what are you talking about, right? We're dealing with a potential crash coming this week. And that's correct. But I think it sets Tesla up in an optimal position. See, unlike other stocks, call it Microsoft, Amazon, Nvidia, to a lesser extent Apple and Google, they really haven't seen much of a crash, whereas Tesla stock is already down 30% to start 2024. Tesla's already experienced the pain. Could there be more pain? Of course, but I think less pain for Tesla, more pain for other stocks is probably a decent guarantee at this point. Tesla stock last week had 5,070 orders, trades from hedge funds and institutions in the options market, totaling $6.32 billion with a positive order value of 62%. Volume for this week's expiration in Tesla was 61% calls, 39.22% puts. That is almost 2 times as many calls than puts. And that was the volume on Friday, considering Tesla stock was down 2%. I mean, that's pretty dang good. Now, open interest is roughly the same, about 61% calls and about 39% puts for, again, this upcoming Friday's expiration. There was a lot of shorting activity as well on Friday with cost to borrow fees in Tesla around 10%. That's insane to have 10% cost to borrow fees on Tesla, where it's already fallen 30% year to date, and it is still a $600 billion company. To pay 10% cost to borrow fees is essentially saying you need the stock to fall about 10% over the course of a year just to make money from here. And I mean, that would be a 40% down year to date at the bare minimum. That's a pretty exogenous bet, if I were to say so myself. Now, short interest percentage of free float at 3.21%, with $15.85 billion currently sold short in Tesla stock. The short interest has actually been rising as of lately. Recently, it was at 2.9%, so there has been new short positions taken out in recent days. The dollar amount sold short is falling, or has been falling, because the share price of Tesla has been falling. And as these shorts have taken on short positions at lower prices in Tesla, if Tesla stock does start to rally, as I think is possible here once we get kind of this reset to momentum, well, yeah, shorts are going to be in a very bad position. Google trend activity for the Tesla lineup shows roughly stable search trend activity for the Cybertruck, going from 28 to 27. The Model Y is falling quite a bit from 33 to 30, but take a look at the Model 3 going from 36 to 37. I think the Model 3 is very popular right now in the US, the refreshed Model 3, and I think this is a sleeper catalyst that, could be a big deal when Tesla reports their delivery numbers, because presumably if the Model 3 has good numbers, well, a lot of that probably came from the US, and people are going to start to say maybe the US is not revolting against EVs or revolting against Tesla. Maybe Tesla will have a better 2024 than we expect. After all, expectations have fallen a lot across the board. Profitability, free cash flow, deliveries, growth rates, all of it's at the lowest we've seen in a long time as far as expectations. So there is a lot of room for Tesla to potentially beat to the upside and give you an upside surprise. I think it would have to be pretty bad out there for Tesla to miss to the downside on these expectations. Global inventory numbers for the Tesla lineup show a small spike in the Model Y. The Model Y has been very elevated for a while now, so that's really not new. The Model X continuing to fall, the Model S continuing to fall, and the Model 3 just trending sideways here. It looks like for a while there, Tesla was trying to just ramp up production of this refreshed Model 3. It looked like there was way too much demand compared to what Tesla could produce, and that's probably why Model 3 inventories have fallen from, some of the points they were at in 2023, 3,000 in inventory, 3,000 here, 2,500 here, down to where you currently are at about 1,200. At one point, Tesla hit as low as 700 Model 3s in inventory. That's a very low number. So overall, I would say this is good news. If Model Y inventories do go lower, that would also be great news, but the Model 3, the Model X, and the Model S are in very healthy places. Tesla continues to run about 3,000 different ads with Google. A lot of them are now video ads, and surprisingly, a lot of ads in South Korea as well as Japan. I obviously don't know what these ads are saying, but you could tell they are in the Japanese and South Korean language. You can see the Model Y starting prices are being advertised. There is this weird phenomena where people just don't know anything about Teslas really. They think the prices are still high, whereas prices have fallen a lot in the last 2 years, and prices are a lot lower today than where they were before. The percent of stocks above their 50-day moving average on Friday was up 0.60% to 56.85%. That's interesting because if you take a look at the headline Russell 2000, the Russell was slightly red, down about 0.1%. NASDAQ got destroyed, down about 1.2%. S&P down 0.65%. And the Dow down about 0.2%. Even though all indexes were red, you actually seen the average stock do okay. Maybe that's not the best way to put it. Maybe the best way to put it is you still seen stocks breaking above their 50-day moving average. So some stocks were still going up on Friday, and a lot of those were a part of the Russell 2000 as the Russell outperformed the NASDAQ about 12x. The latest AI investor sentiment has bullish investors at 51.7%, neutral investors at 26.5%, and bearish investors at 21.8%. So there was a lot of bulls. This last survey was on Thursday of last week. So there were a lot of bulls, tons of bulls, almost record low bears. But then you had Friday. And obviously that killed a lot of the bearish momentum. The question is, does that continue? Will the bearish momentum continue? Will the bullish momentum come back? What's the number one thing to be watching for? We'll be going over that in a short video coming out at 8 p.m. tonight and my exact expectations for Tesla stock this week and how ultimately, well, Tesla stock could go higher. Now take a look at this. This is phenomenal. At the same time, everyone was bullish on markets last week. I did this survey 6 days ago, this poll on YouTube. And I said, in general, how do you feel about Tesla stock right now? 45% said they were bullish. 45% said they were bullish. And 9% said they just voted to see the results because you can't see the results unless you do vote. 18% were neutral and 28% said it's going lower. All in all, that is 46% of you guys that are generally speaking more bullish than not on Tesla said it's either going lower or you're neutral on the stock. That's more than the 45% of investors that said they were bullish on a relatively bullish Tesla YouTube channel. That's insane, okay? That is very, very low. Very, very low. And I think if you were to ask the average investor, if you were to ask, kind of the average guy on Wall Street, you're going to get a much different survey than what we got here. It's going to be way more bearish. Just judging on how relatively, bearish or neutral a lot of you guys are right now, that's typically when I want to do my buying, is not when people are bullish on a stock, but when people are bearish on a stock. As long as nothing changed with the company, as long as things are still going fine, the company's still growing, they're not in a cyclical downtrend, right? EVs are not going away. Robots are going to be here. How long that's going to take, I don't know. Full self-driving, that's coming at some point, whether it takes years or months. That's coming. Robotaxi network, it's coming. There's been no changes or developments in a negative way to any of those things. Just expectations have gotten lower and people have got more pessimistic. Now, I don't know about you guys, but that sounds a lot like a buying opportunity to me. Sentiment currently around Tesla on StockTwits is bearish at 31. Yesterday, it was at 71, which that's a huge drop for a weekend. So we'll see what's going on there. Message volume yesterday was at 66, categorized as high. Today, it's at 56, still categorized as high, but not as high as yesterday. And the participation ratio is at 55. Now, I want to take a look at the SPY and see how that is looking here over this weekend. And yesterday, sentiment was at 35, considered bearish. Today it's at 40, so still considered bearish, still not a great number, but not as bad as yesterday. Now, what's actually interesting is the message volume is very high. This is pretty uncommon, especially to see on a index over a weekend, to actually see the message volume going higher. Yesterday, message volume was at 62. That's high. Today, it's at 70, which is high. I mean, you're almost extremely high there. And the participation ratio is a lot higher than what we have seen before at 53. So that means more accounts are talking about the SPY than what is kind of normally done here on StockTwits. So I think at the very least, that's a good indication we're going to get a lot of volatility in this upcoming week. Now, as I mentioned in the last video, you really don't have much as far as data coming tomorrow. It's all going to be about AI, about semiconductors, and whether or not the markets continue to sell off. Now, Monday, you could see an especially strong sell-off in semiconductors. Nvidia fell 3% Friday in after hours, but you also have the ARM SoftBank lockup period coming on Tuesday. And, a lot of the time before a lockup period, people will sell out the day before, couple days before, just because of, the presumable selling that SoftBank's going to do coming Tuesday morning could drop the stock even more. So why not get out ahead of that if you think they're going to sell stock? So Monday could be a pretty rough day for semiconductors in general and for the broader markets. On Tuesday as well, you are also going to get the CPI report. We went over all of the expectations in the last video, so we're not going to do that here in this video. Wednesday, another relatively slow day. We're going to be reacting to either a bounce in the markets by then or a continued sell-off. Yeah, so Wednesday, not a lot as far as economic data or events. On Thursday, you have PPI month over month and retail sales. And then on Friday, you have Michigan consumer sentiment that will also be coming out. I will also mention that this is the last week before we get a new summary of economic projections and hear from the Fed again. The Fed will be speaking, I love how specific this is, precise, in 1 week, 3 days, 0 hours, and 17 minutes from now. And we'll get a new summary of economic projections. So that means the Fed's going to do their dot plot. They're going to predict how many cuts they expect in 2024 and over the next, 2 years after. So all the way till 2026. They're going to put down their PCE expectations, their unemployment expectations, and their Fed funds rate expectations. So it can definitely move the market. So summary of economic projections. That comes out on March 20th. So we take a look. March 20th is next Wednesday, okay? So that's going to be volatile the next following week after this week. But there's a 4% chance of a cut, 96% chance of a pause. Let me tell you right now, if the Fed came out and cut for whatever reason on March 20th, that would spook the markets big time, and I would expect an even larger crash. For May 1st, you're still expecting a continued pause. For June, you're expecting your first rate cut. So there's 57.4% odds of a rate cut, 26.6% chance of a continued pause. And it's really going to come down to what that CPI data looks like and how the economy is looking, as we get to, next week. And then the Fed does their summary of economic projections. Right now, markets are pricing in 1, 2, 3, 4 rate cuts in 2024, bringing the federal funds rate by December 18, 2024, down to 4.25 to 4.5%. And let me tell you right now, if the economy gets worse from here, well, there's going to be more than 4 rate cuts, most likely, especially considering it is an election year. There's a lot of political officials calling on the Fed to start cutting rates even now. CNN's fear and greed indicator is at 74, which is in greed territory, but pretty close to extreme greed, which is 75 or higher. The yield curve recently has been uninverting. Inverting more. You're now inverted 39 basis points, which when the yield curve goes above this black line, so it starts to rise and uninvert, that's when you are going to be on recession watch, and that's when the markets may start to panic a little bit more. Now, as far as the Atlanta Fed GDP now estimates for GDP for Q1, they recently went higher again. They were as low as 2.1%. Now they're back to about 2.5%. The average estimate on Wall Street is about 2%. So I think expectations are a little bit on the high side for GDP. If we start to get bad economic data, I don't think markets are expecting that at all as a consensus view right now. We do have some earnings this week. Like Monday, we have Oracle and Asana. Tuesday, you have Kohl's and Workhorse. Wednesday, pre-market, Dollar Tree and Zim. Wednesday and after hours, UiPath. Thursday, pre-market, Dollar General, Dick's Sporting Goods, and Futu. Thursday and after hours, Adobe, Blink, and Ulta Beauty, as well as PagerDuty. And then Friday, just some random names you probably never heard of. There are more earnings than just what is here, but these are the ones with the most analysts covering them and the most liquid options markets. As far as Tesla stock specifically, I really would love to see Tesla get back above this line right here, this ascending line of support. You're currently under that, as Tesla stock is at about $175 per share. You'd have to get back to about 178 or so. Do I think that's going to happen? Probably not. I think Tesla stock probably goes lower this week, considering all of the catalysts that we have and all of the algorithmic trading that likely is going to be taking place, and just non-discretionary, just selling of stocks may ultimately take place. Now, if that does happen, well, Tesla stock could fall back to the 165 range. But no, I do think the downside is a lot more limited here for Tesla than other stocks, because Tesla has already fallen so much. So normally people assume Tesla has about a 2-to-1 beta, right? That if the NASDAQ goes up 2%, Tesla's going to go up 4%. If the NASDAQ goes down 2%, Tesla's going to go down 4%. And, it's kind of been like that for a while, but I think now is a little different. Again, just because sentiment is so washed out in Tesla, and you have already seen Tesla stock fall a lot. Now, if the broad markets do just utterly collapse and everything goes wrong, then I think Tesla stock could trend back to that 140s area, and that would be the next level I would be targeting. But if Tesla gets back to 140, I think you probably want to have a lot of buy orders at that level if you're still bullish on Tesla, and if nothing has materially changed in the business at that time. Now, again, if you get under 165, then you could be looking at 150 at the bare minimum. That would be a big break of this downtrending line here in this downtrending channel. Ultimately, this is a bull flag that you see on the longer term basis, where you have Tesla in between this channel trending lower. Ultimately, Tesla will find a bottom here, start to rise, and once you break out above this trend line right here, which, give it a couple months, could be around 220, that could set Tesla stock up for a run well into the 300s. And I think by the end of this year, it's going to be pretty clear Tesla stock is well, cheap, or could be cheap. Especially if Tesla is able to do what I think Tesla will be able to do, and that is raise prices as the rates go lower. Well, yeah, Tesla's margins may dramatically improve. At the same time, Tesla has been lowering the average production price of a Tesla, or cost of a Tesla, going from, $40,000 or so down to about $37,000 today. If Tesla can start raising prices, you could see the best margins you've ever seen in Tesla's history. And I don't think that is anywhere close to priced in as even a possibility of happening. So that is going to go ahead and do it for this video. Hit the like button as well as subscribe to the channel if you guys want to come trade with us as well. Check out that link down below in the description of this video to join the trading community. You might as well come hedge out your portfolio, especially if this week is as crazy as it looks like it could be. Thank you for watching. If you guys want to go ahead and follow the X account as well, share a lot of great information over there. Tesla news, my opinions, other things as well, hedge fund institutional opinions. I like to keep you guys very informed over there when it all is possible. Ladies and gentlemen, thank you for watching. Enjoy the rest of your Sunday, and I will see you in the next one.